All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Let's go take a look at the action that's out there. But before I do, quick comment here on Caterpillar. I did get a comment sent to me that said, "Hey, how come things that we hold, i.e., Home Depot, seem to not reverse and go our way, while things we get, bumped out of end up reversing and going our way?" And referring to something like Cat, which after I got out, fell a dollar and probably will be down $3 tomorrow. And look, it's one of those where I know that's that feels like that, and that is the perception. And I've had two, like that here this challenge so far, the XLY and Home Depot. But if you go look at all the trades in aggregate, it just simply isn't the reality. There's some trades on there where boom, I got out, and boom, it went the other way immediately. And good thing we got out, took a nice gain. Go, it tends to all balance out. But yes, I do understand the feeling. I get it, and it's one of those where I've had it since I've started trading. It exists, and it's something that, look, from a trade standpoint, you're not really a predictor. It's risk reward exposure, right? And so there's always that hindsight game that comes in. And it's simply human, and it's simple reality, and it can be very frustrating, and I get it. But here this morning with Caterpillar, I could not take the chance with where the challenge is. I couldn't take the chance of it continuing to drive higher, there, and it was gapping above the 7-hour. Breaking above the 7-day moving average. We had general market strength. It hit my risk tolerance, and so boom, backed on out, moved on, lived to fight another day, and we'll go about it here. I've been looking, can I put that money into play somewhere else? And I haven't found something that I go, okay, you know what? I like not only the setup but the probability here. There's some interesting setups, but I think some of the probabilities are a little bit mixed, with this gap up here this morning. Now, if we look at the market in general, I'll just back this out to a 5-minute chart. You can see what this rally looks like here. And I'm just going to put on a retracement. And in my short note this morning, I just put that, hey, you know what? The market's set to open up at the initial retracement of the drop Thursday, Friday, or mostly Friday. The market's set to get to this first retracement level or open at this first retracement level. I have to keep in mind that the full retracement is up here. And, that risk is real. That risk is, probably going to be realized most likely given what's out there. And, very quickly here this morning, we got close to it. It hasn't quite, fully retraced just yet. But it's up in that area, up in that range here overall. If we take and go with something like an IWM, small caps, and we do the same type of retracement, you can see it's same distance. I mean, here's the 62% retracement, and boom, it just came up just slightly short of it. But IWM opened at the 38% retracement. Okay. Qs, tech. All right, here we go. Here's our retracement. And this morning, where did it open up at? 38% retracement. And where did it kind of stall or pull back from? Just shy of the 62% retracement. Why do I show this? Because this is very rare. This is very unusual. We don't see this very often, where all of the indexes are all in their different retracement levels and doing their thing at these retracement levels. Now, the Dow opened up at the 50% retracement, and is now at the 62% retracement. So the Dow has shown some a little bit of relative strength, thanks to Apple and a few others. But, we pretty much have the entire market doing the same thing here today. There's not a lot of differentiation out there compared to other days, which is more indicative of a bear market type bounce. But it is one where all the indexes are up about the same percentage. Most of the sectors are up about the same percentage, with materials lagging a little bit. But in general, the percentages are about even here. In fact, if we come and we look at, we just kind of come in here and look at a sectoral breakdown of where things are, you can see energy leading the way, materials lagging, but everything's kind of in this 0.7 to 1.3 area, which is very tight, compared to what a normal day is, here in the market, especially when there's this much of a move. Generally we see a lot more of a differentiation here with things. But anyway, you see the leader on top, energy. And, this is one where oil jumped here overnight. You can see oil up at $1.35. And, this is an area that I've been looking to, get short, with Halliburton. Haven't found my opportunity. We talked about the breakout, here with oil. And let me just back this out here to kind of take a bigger look at it. But we talked about this kind of breakout that occurred off of the, over this 58.5 level. And, we got the breakout, and then we got the pullback. And the pullback came back down to this level, but never really broke it. And this is one I was watching. I go, okay, if it breaks, boom, there's our chance. There's the opportunity to play this back to 55. It is not broken it, and it's just kind of stalled around. And now today pushing on back to new highs. So what's it tell me? It tells me, hey, you know what? Any energy trade is a little bit delayed here. At least on the downside. Yesterday I had a downside trigger on Exxon, and I looked at it and I just thought, man, this just looks weird. It just looks kind of like a sucker's bet. And, so I wasn't willing to go after it. Here's Halliburton. You see it lagging, right? Halliburton lagging oil, which has been the key, which has been normal for Halliburton. It's definitely lagging oil in a very big way over time. You look at Conoco, big jump up here today, big move here on that stock. You look at Chevron, not as dramatic, right? But it's a space where we do see some big jumps. EOG Resources and Anadarko and Apache and all these stocks kind of making some pretty sizable jumps, recapturing their 7-day moving averages and such. And what's that? What does this type of price action suggest? It suggests further momentum higher. That's what it suggests. It suggests further momentum higher. Short-term snap-down, breakdown here that, yesterday or Friday and yesterday. And now you see things like Anadarko breaking above Friday's highs. And that is classic bear trap. You were bearish. Oh, you sold on that. Okay. Whoop, forget you. Off we go. And we're seeing some very classic bear trap elements taking place here in the energy, in the energy space here today. Yesterday talked about J&J. I was watching this here at the open, and we talked about it on the lower Bollinger Band and the kind of the risk reward there that it, if it's able to hold that band, if we see J&J up, market's going up, and you can see this morning it opened up and it broke the 7-hour, and here's the hourly chart. You can see the gap up above the 7-hour, and it's one where, let me come to the minute chart here. You kind of see what it did. It just took off. I mean, it just rocket shipped higher, and has not slowed down. Just simply has not slowed down here on this move. A very bullish style move here off of a key kind of support level, and one that doesn't offer a good risk reward. Where it sits right now, and if you go look at J&J after big days like today, It's a very mixed bag as far as what happens afterwards. Very mixed bag as far as what happens afterwards. But the days where it has this action and then the next day is just kind of a low volume down day, it's almost always higher for J&J. So I will be looking for that and for that opportunity to jump into J&J on a little bit of a little bit of small pullback down day if that does happen tomorrow. Some things that I would really like to short, like a FedEx lagging here today. Nice to see from a short standpoint, a little bit of lagging action here with it. Now, when we saw lagging action in stocks on this dip right here, right? On this dip back at the beginning of March, when we saw lagging action on stocks, the market jumped, and those laggards continued to lag. But as the market just kind of drifted higher, we saw the laggards turn into leaders. Home Depot, for instance. Now, obviously catalyzed by 2 upgrades, but we saw a lot of that. And I think that is the risk. The market isn't in the same type of technical area. In fact, this looks very much like a little short-term rebound that's going to get sold. But overall, you do have to be wary of laggards becoming leaders. We are seeing that in the energy space today. Some of the recent laggards, outside of Halliburton, becoming leaders here today. The Conocos, it's been a laggard leading today, and a Anadarko laggard leading here today. And when you see laggards lead, that's a good sign that shorts are getting squeezed. That's generally that's what we're talking about. Shorts getting squeezed, and some would theorize that the market can't top until all the shorts are squeezed and become bulls. And they have some good precedents there and some good ideology there. Can you really tell when exactly that happens? Yeah. It's why they call trading an art more than a science. But anyway, that's some of the stuff that's going on out there here today. One of the other areas, kind of watching gold and the GLD and pull back here this morning. This is just something I've not been able to find an entry point in. We have Bollinger's contracting. So it just kind of screams consolidation overall rather than trend. But I talked about it yesterday in kind of the gold miners. Do I go and play them, for a continued shot higher? Absolutely love how well the gold miners are holding up here today. Barrick Gold here today, gap down, and I see nothing but buy pressure come into it here this morning. We see Newmont Mining with the same thing, gap down, nothing but buy pressure, piercing that upper Bollinger Band. So, a nice little pullback in gold here today. But to me, it looks very much like it's giving some nice little entry points for some of these gold miners. Yamana, AUY, which, had a very sizable move yesterday. When I talked about J&J and what I'm going to be looking for in J&J tomorrow, Yamana is doing that exact thing here. This is kind of what I'm looking for J&J to do tomorrow. Low volume, just kind of, inside type day. Generally, those will go higher with J&J. Now, Yamana doesn't have that same tendency, but, that's kind of the same picture that I'm looking for. You look at Harmony Gold, kind of doing that same thing. You look at Gold Corp. This thing's been consolidating, gaps down today, big up volume yesterday, gaps down today, not only being bought up today, but being bought up on very strong volume. So a very, very interesting spot, here to, for me to go after, and I will be looking to get into that, here as the day progresses here with gold. It's an area that I think goes higher, even if the market goes higher. If the market goes lower, I do think gold goes significantly higher. But, you can see the UUP, the dollar, which has continued to rebound, right? Which has continued to rebound here, which is really interesting in light of the Fed. But what's that tell us? That tells us that, hey, the Fed may be dovish, but other global economies aren't exactly tearing it up. This is one of those where the fear out there is of global recession, not U.S. recession, global recession, and that's why we do not see the dollar lagging. Here as some of those fears kick on up to another level out there, in the market right now. There's some interesting kind of, individual type sets, things like First Solar. This had some monster bullish analyst activity, here over the past month. And, broke on down Friday, has not found a bid ever since. And even with oil up big today, generally you'll see solar bounce with oil up. But we are seeing solar get sold off here today, really kind of lagging the market in a substantial manner. You see some of these ag stocks that have just been in monster bear markets like Mosaic also continuing to lag here today, helping to drag down some of the materials out there. And then you see things like BHP and Rio, which just, continue to push near these highs, and just have kind of said, hey, market volatility be damned, we're just going to keep on going up and up and up. And, they're not going up with any sort of ferocity, here over the last week, but they have continued to be pretty darn solid there. So again, broad-based market rally, pushing into the retracement levels. I do think these are some key levels here for the market. J&J, some nice little upside action potential there. Gold, another very nice upside area. The FedExes, Halliburtons, even Caterpillar. And I would not be too adverse to jumping back into Caterpillar before the end of the day here today. And, getting back in there and just saying, all right, got whipsawed. All right, I'm jumping back in. With the setup that we see happening, it had everything this morning that you tend to see for a very nice bounce, and it's not materializing. It's same action that we saw, back here on this bounce, similar action to what we saw back here on this bounce. That had nice follow through. We don't see follow through on Caterpillar here. I still think we're talking about this 124, 126 level. There's still plenty of room for me to go in and to make some money there with it. If I do jump back in, I will get a little bit more aggressive though with the options. So it would be a higher risk, higher reward type of situation. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.